What's up, everybody? So today in this video, we're going to be discussing why you signing off on a consumer proposal is possibly one of the worst deals you could make in 2025. So oftentimes when I'm talking to a prospective client, so someone that's not even a client, I'll kind of do an analysis of what they're currently going through, whether they have a few collection accounts, some missed payments, whatever it may be. But then we always get to the public record section and we find that they have, if not one, a few consumer proposals that they've been discharged from, some that they have not been discharged from. And oftentimes I kind of find myself disappointed in the repeat offenders because you already have went through this once and you see that, or you see what this process is. So you should kind of know that this isn't the answer, right? And also there's a lot of implications with you filing more than one consumer proposal. So in actuality, a consumer proposal is a bankruptcy. Now, even though your trustee may not sell it as a bankruptcy, it's a bankruptcy, right? Typically, the process is that trustee is going to get you to sign off on that agreement, and then that trustee needs to go to your creditors that you owe money to and get them to agree on that deal, okay? And that trustee makes a percentage off of what you're paying on that monthly basis. So you'll get a monthly payment that you need to pay. But what a lot of trustees don't tell you is that those creditors can deny you for the proposal. So, what happens when you get denied for that proposal? Well, that proposal is still going to show up on your credit report. That bankruptcy is still going to show up on your credit report and it's going to affect you for the next 6 to 7 years. You're not going to be able to get approved for credit. You're not going to be able to dispute that thing off. You can't even pay it off because there's nothing to pay off. It is literally just there as a proposal that you failed, or not even failed, you weren't even approved for, right? So anytime someone comes to me and I'm lucky if I can get to them before they sign off on a proposal, I tell them to take the independent route. And what that independent route is them going directly to the creditor that they owe money to and paying that creditor. Now, yes, you paying off or you doing a consumer proposal does protect you from being sued by that creditor or your wages being garnished. But guess what else protects you from being sued or your wages being garnished? You simply paying back the creditor that you owe anyway. You're doing the same thing with that proposal, even if that trustee says, hey, we're going to get you a deal, we're going to get you a discount on this debt. Is it really worth it? Because you have to look at how the deal is structured. So it takes 5 years for you to pay. Typically, they'll put you on a repayment plan of 3 to 5 years. But in most situations, like 90% of the time, I see that clients on a 5 year payment plan. So you're paying this off over 5 years. That information is there on your credit report. It's not being removed. It's there for the next 5 years. And you're making payments on it actively. And then after you're discharged, you need to wait an additional 3 years for not only for you to, receive that discharge letter, but for the consumer proposal and the accounts included in it to be removed off of your credit report. And I've even seen some situations to where those 3 years elapse and the information is still there on the credit report, and that consumer or the client still needs to dispute and get that information removed. So there's just so many downsides to a consumer proposal, and I'm just completely against it because if you have a full-time job, then you could figure out a way to where you don't need to take the consumer proposal route, but the more independent route. And to be more specific, the independent route is you creating a budget, you making incremental payments towards all of these debts, because the consumer proposal was doing the same thing anyway. And I may sound like I'm getting a little loud or a little frustrated, but it's, if you look at the numbers, if you look at the data, it's always better for you to act independently versus you going through a trustee, taking on this bankruptcy, making payments, then having to wait for that bankruptcy to get discharged. And if you go and apply, let's say you go to CIBC and you go into the website and you apply for a credit card, before you even get into the credit card application phase, they will literally ask, have you filed for bankruptcy in the past 10 years? And newsflash, they view consumer proposals as a bankruptcy. So if they see that you have had a bankruptcy in the past 10 years, they're not going to approve you. Now, this could vary from bank to bank, but this is one of the top 5 banks in Canada, CIBC, right? So I wouldn't be surprised if a lot of other banks follow the same criteria where, hey, have you filed for bankruptcy in the past 10 years? If so, you don't even waste your time applying for this product. right? So do you want to block yourself off for the next 10 years from being able to get approved for credit? So I always try to bring the facts so that you can make an educated decision on what's best for you. The problem is when most clients speak with trustees, they kind of sell them the dream, right? And regardless of if you go through a trustee or you do credit repair, which that's the service that I offer, the the process is a long process because it took you a long time to get into this situation. But the fastest process is you to act independently, work with the creditors that you know you owe, pay them back, and if you're dealing with a collection company, dispute it. If they do come back with proof of debt, then you negotiate what we call a pay for deletion. This this is the fastest way. This is the fastest way. But so many people get sold into this whole consumer proposal thing, and I feel like it's just wide swept across Canada because I'm speaking with clients, I'm speaking with potential clients every single day. I speak with clients every single day, and I see a consumer proposal every single day, and I'm just like, how did this person not fully understand what this is? And I kind of feel the blame is on the trustees because they don't properly explain what this is. And this isn't to knock all trustees. I believe there are some good trustees out there, but again, this is the way they make their living. So you are going to come across trustees that are just in this for the money, not there to actually help the consumer. If this is a for-profit operation, this is a for-profit operation. Okay, so if they're selling you this dream and it sounds too good to be true, understand that it most likely is. The reality of it is credit repair or you fixing your credit is a long process. Okay, so if you go through that consumer proposal process where you're on a 5-year repayment plan and then you have to wait an additional 3 years, that is longer than you. Let's just say you had a charged off CIBC credit card and you paid it off. It would only take 6 years. But with the consumer proposal, you have 5 plus 3. So you have to really just look at those numbers and say, hey, what makes sense? And maybe you only saved a few. I've seen clients do consumer proposals, bankruptcies for only $5,000. It doesn't make sense. Why go into a bankruptcy over $5,000? Why go into a bankruptcy for only $2,000? It doesn't make sense. That is something that's realistic and you could pay back. Now, there are very rare situations to where I do believe a consumer proposal does make sense. But in most situations, with most clients I talk to, if they would have took the time to create a budget, manage their income, they could have worked with those creditors and paid that debt back off. But most people are unwilling to have that difficult conversation. That's what I find in my experience. Most people do not want to call that creditor and say, hey, I'm financially going through a tough time. I'm only going to be able to make incremental payments on this debt. But a creditor, they have programs in place because they want their money back. They want their interest. Creditors do not want to have to write this off as a tax write-off, possibly not even recoup their money, their interest. They don't want to have to sue consumers. They rather not because again, that's just more money that the business has to spend. They would rather have you for a client for a long, extended period of time because they understand they're going to make interest off of you. Banks live off of interest. So if your account is not up to date and active, then they're not making money off of you, right? They rather have those accounts active, which means the banks do not want to see those accounts become delinquent. They don't want to see your credit cards become charge off accounts, right? That they have programs in place to protect you. If you recently, one of the biggest things I hear all the time is I recently lost my job. That's the worst. That's one of the worst excuses because if you called your bank and let them know this, a lot of times they give you a 6 month grace period. And hopefully within that time you're able to figure something out. But it's all about being resourceful and knowing what you can leverage to put yourself in the best situation. But if you're thinking about signing a consumer proposal, just avoid it. It is a bankruptcy. And if you don't believe me, do your own research. There's so much free information out there on the internet today that you can come to your own conclusion. Yes, you're probably not going to be able to fix your credit by yourself. You do sometimes need professional help because again, maybe you're a nurse and you work obscene hours, you work crazy hours, you work late nights. I have a lot of clients that are truckers. They don't have time to be disputing with the collection companies, which is why we're here to assist them. Nurses don't have time to be trying to follow up with collection companies, negotiate paper deletions, which is why they hire us. Even though it is possible for them to do this on their own, it's a lot of work. So they don't have time to do it, which is why they hire my company to do it for them. But we also explain to them that this is a long process. This is not something that's going to happen overnight. And I'm not quite sure what's going on with trustees to where they're selling so many people on consumer proposals, but it seems as if people have been sold this dream. But the reality of it is that, or the reality of it is that consumer proposals are simply bankruptcies. That's it. And if you're doing a bankruptcy for 5,000, 10,000, 20,000, that's not enough money to do a bankruptcy over. A lot of times you can work something out with that creditor if you have a conversation. If you call them, they may have a program for you. And even if they don't, and they see that you're still making payments towards that debt, they are less likely to A, sue you, B, write it off as a tax write-off, and then C, close the account. But as soon as you stop making payments, you're ignoring their phone calls, they are going to close the account, they're going to write it off as a tax write-off, they're going to give up on you, and then they may even sell that debt to collections, which will create another account, right? So you have to think about all these things that can happen. There's so many things that can go wrong with you just ignoring this debt. But you can act independently and start making incremental payments back to the debt. You don't have to take a consumer proposal. Okay? Be smart, do your research, and pick the best decision for yourself. Now, again, I am going to preface this with there are a few rare situations where a consumer proposal or a bankruptcy is necessary, but in most situations, it is not. It is not. Really create a budget. Most people do not want to manage their money. Everyone is aware that they should be managing their money, but they don't have a budget or a budgeting tool that they can use and leverage. So really think about this if you're considering doing a consumer proposal in 2025.